Everybody, welcome to our June webinar by the Community Navigator Pilot Program. Today, our topic is Ask the Expert, and we're going to have a little bit of an accounting Q&A today. Today's webinar is going to be a collaboration between Roth Co. as well as the US PAC Midwest region. So Ari, why don't you go ahead and give your, introduce yourself and to our audience.
Perfect. Thanks. First off, thanks for having me. My name is Ari Galster. I am a tax partner at Roth Co. I've been in public accounting for over 10 years now. Before becoming a partner, I spent about 7 years at the Big Four between PwC and Ernst & Young. So I've been able to see a wide range of clients. Some of these are just starting up businesses that are growing, and some of them are publicly traded companies. You know, my client list includes some of the largest publicly traded companies in the country, as well as currently the largest nursing home owners throughout the United States. So I've really seen that full range of clients. I've seen what's worked for people, where they've kind of had their pitfalls. My background has always been in tax. I did one audit in my life and I realized that was not for me. So I've been focused on tax. Just a little bit about the firm as well is that Roth Company, we were top 150 ranked firm in the nation. We've been around for 40 years and we're still growing at the rate of a startup. We were ranked in 2022 as the fastest growing top 200 firm. In 2023, we're looking at another great year. At this point, we've expanded to over 200 employees across 5 different locations. We've got New York, New Jersey, here in Chicago, my hometown. Then we've got one office in the Middle East, and then also in the Philippines. And so we are really bringing you a full spectrum of services, whether that's tax, audit, advisory, as well as our wealth management, which helps a lot of individuals on their investment portfolio, as well as their business cash management. So with us, I don't know if I consider myself an expert. I appreciate the compliment, but we're here to help people grow their business and achieve their financial success.
Sorry about that. There was like a little bit of tech issue, but thank you so much, Ari. I'm so happy to be able to work with Roth & Co. to kind of bring some of the business owner questions that I've gotten as we have been doing the Community Navigator Pilot Program, and to ask you today to kind of see, what is some information that they could glimpse and learn from you today. So there was a little glimpse of the first question already, but a lot of entrepreneurs have asked me when they're starting out and they're trying to figure out their business structure, they ask me, what is the difference between an LLC and a C Corp? And is one better than the other when it comes for starting a new business?
Perfect. Yeah, so this is a very common question you have. You come up with your business idea, now you think about, how am I going to structure that business? So we're going to go over just very high level, the differences between when someone says, hey, what's an LLC, what's a C Corp, what's an S Corp as well. So an LLC is a limited liability company, right? So what that means, it's going to protect the owner, right, their personal assets from their business assets. So let's say, God forbid something happens, right, and then they're sued or they have a problem financially. The LLC is going to protect the business from losing their personal assets, right? That could be their home, their car. So that's typically why you find someone create an LLC, right? And let's talk a little bit about, a C Corp. So a C Corp is your typical corporation, like you think about, typically publicly traded companies are corporations, right? You file your 1120 tax return. And why people tend to be a C Corp is because a publicly traded company, you're allowed to have an unlimited amount of shareholders. Your shareholders can be trusts, estates, individuals, partnerships. That's typically why you find someone become a C Corp. Now, very often there are downsides to a C Corp, and typically for a starting business, a C Corp doesn't really make much sense for them. And obviously this is all dependent on someone's personal financial background, speaking with their accountant. And the reason why C Corps have a big disadvantage is because you end up getting something called double taxation. What that means is that a corporation pays corporate level taxes. So before you even get any money in your pocket, your business is going to be paying 21% as of this date in just taxes, right? So the corporation gets taxed, and then all of a sudden you say, hey, like, I'm a business owner, I deserve some of those distributions, some of the profits, right? Then once you get that money, you're going to be taxed again at your personal income rate. So people tend to shy away from C Corps just because they want to avoid that double taxation. Now, on the flip side, what you have with the LLC is that very often people set up what's called an S Corp. So with an S Corp, that's primarily for a small, business corporation, because they can only have a limited amount of shareholders. But typically why you find someone have that is because they're one owner, they're just getting started. And why you want to be an S Corp is primarily because you want to avoid the self-employment tax. So what's self-employment tax, right? So for example, you get you're having a business, you made $100,000. When you report that $100,000 on your tax return, you're going to be paying 15% just self-employment tax. So what's special about an S Corp is that how an S Corp is set up is that it allows the business owner to not have to pay self-employment tax on their profits. But there is always a little bit of a catch. And with that is that an S Corp, they have to have what's called reasonable compensation, right? The owner has to also be sort of an employee, meaning that they receive a W-2 as a wage. So like I said, just to recap, an S Corp, they don't pay any corporation tax at their level, which is nice. It's called it passes through to the owner, but they're going to have to make sure that their owner is getting a reasonable compensation. So for example, right, let's say the business is making $1 million, right? And they say, hey, I don't want to pay self-employment tax. They can't just say, I only got $20,000 as a W-2 wage. It has to be something reasonable, right? So what's something reasonable someone who's making $1 million of business profit should be getting as an employee, right? It's definitely going to be a lot more than $20,000. So that's, in speaking with your accountant, you really got to figure out what should justify as reasonable compensation. But that, in a nutshell, is kind of what's going to separate a C Corp versus an LLC versus an S Corp.
Okay, thank you so much. That's a lot of detail. And I think that that's really key, which is to consider as you're starting out which one of these structures is for you. And I think this gives a lot of like initial information for someone to think about. Definitely, not to toot Ari's horn, but he is here to help anybody who has further questions on this. All right.
Exactly. And I'm just going to go back real quick.
Yeah.
Obviously, when you're having your structure, that's when you really want to speak to your accountant, because then an accountant's going to look at what other businesses maybe you're involved with, what is your family setting, what are the revenue do you have coming in the door. That's really the most important thing, is that, C Corp, S Corp, whether you want to make this a partnership, whether you want to just be a single amount LLC, all that should be done with a trusted advisor who knows what you've got going on in not just your personal life, but your business life. And they're really going to give you that best advice.
Sounds good. Thank you so much for all the extra detail there too. So moving on, I also have sometimes some business owners who maybe have already started, but for instance, they might have gotten a loan or some grant money, or even they are probably funding their business on their own. And since you are a bit more of an expert when it comes to finances, I've had someone who asked, what kind of things should I be doing daily to be financially aware and healthy? I assume this is towards your business, but if you have any personal tips, Ari, we will take those as well.
Okay, perfect. So I'd say, this is more of your best standards for how you're going to be financially aware and healthy, is that you want to focus on your business, right? You want to make sure that your business is going to be profitable. So what does that mean? You got to really create budgets. Don't just think about, hey, I've got this great idea, I can sell it. You really got to think about, the expenses portion of your business. So create your budgets, right? Think about how much these things are going to cost. If you're taking out a loan, think about, what's going to be your repayment on your loan principal? What's going to be your interest expense? You really need to be able to monitor, from month to month. I wouldn't say daily, right? Month to month, think about, hey, how am I tracking on what I budgeted for my expenses and for my revenue? Where am I turning it around? How am I going to make my business profitable, right? You should always got to have a plan in place. And also, don't be afraid to say, hey, this plan isn't working. I got to pivot a little bit. It happens all the time in business. You think, one avenue is how you're going to make your money. And you realize, hey, I got to be light on my feet. I got to think about it. If anything we've learned over these last, 3 years, just dealing with the pandemic, right? You saw a major shift, some people working from home, some people dealing with PPP, those people, really those small businesses, they were light on their feet, always thinking about, hey, how am I going to shift? And that's exactly what someone needs to be thinking about is have a budget in place, have a plan in place, and make sure that you are, reassessing if that's really gonna be, if you're on track. Now, let's think about what you need to be focusing on. Your focus needs to be on your business. So what does that mean? Hire a bookkeeper right away from the beginning who understands your industry, right? If you're in a restaurant, if you're in retail, make sure that you have a bookkeeper that really understands how to track your books, how to do a bank reconciliation timely. The last thing, and this is something I see all the time, is that someone, they just focus on the business and then all of a sudden they're trying to play catch up, right? All of a sudden you're playing catch up on 6 months of bank, reconciliations. It's not going to be efficient. It's not going to be accurate. So right away from the beginning, hire a bookkeeper who's trusted. Ask some of your friends, who they use, who can they rely upon, and that's really going to set you up for success. And then the last thing I'd say is partner with your CPA, your tax advisor, right away from the beginning of when you're starting your business. Very often what happens, right? Hey, I started this business of June of 2023. I don't have to worry about my taxes until, March, April of 2024. So maybe in February time, I'll start reaching out to some local accountants to try to get them to file my taxes. That is not what you want to be doing. You want to find an accountant who's going to be there while you are growing the business in the middle of the tax year. So throughout 2023, you're consulting with your tax advisor, say, hey, my quarterly estimates, how should I be paying them? Is there anything I could be doing in real time for actual tax planning? That's where you need to be doing. So don't think about your accountant as, hey, I'll take care of it during tax time. Your accountant really needs to be your partner, right? And with your partners with you during your daily, weekly, monthly functions of the business, so too the same thing you should be doing with your CPA. And that's how you're really going to be financially aware and healthy, is by having an expert help you along the way, not after the fact.
Okay, very good tips. I think when I saw your first tip, just creating budgets and track metrics, this applies not only to your business, but to yourself, right? So with your income, I think business owners can take that skill that maybe the people they already employ, where they kind of track, if they were a employee first, they're tracking their income and their expenses. They have to do the same for their businesses. And also, like you mentioned, how to continue tracking that and to remain profitable and, changing their plans when they need to. And having a partner to do that from the very beginning probably makes all the difference. Okay. Thank you so much. I think that that's really a good tip for people to keep in mind. And that's definitely why the CMPP program is here too, to get you connected to somebody. All right. So I had another business owner, and this is a real one. This is there's have been business owners who have just had a rougher year, maybe from the last to this year, and a lot of them do ask me or just kind of actually just to vent a little bit. They say that they pay a lot in taxes and they don't really feel like they're even turning a profit on their businesses anymore. Some of them would even say that they really technically haven't recovered and their business did a lot better before the pandemic. So what kind of, tips or maybe some action steps do you have for them, Ari?
Sure. So the first step I'd say is a little bit of like a mindset, right? So if you're paying taxes, congratulations. That means at least you have a profitable business, right? It should be. There are many people who don't even have a profitable business. So this is a good problem to have. You say, I got a big tax bill. Usually we're at a good starting point. It means at least your business was making money, right? Now, taxes is always going to be your biggest expense, right? So you really need to have that as factor in as part of your budget, right? Going back to the slide before we talk about setting budgets, think about what your tax rate is going to be. Take that into account right now, right? And so when I say this is also why you need to have your accountant working with you from the very beginning, because then you can make real tax, adjustments. I say, real business strategies in real time. So for example, here in Illinois, we've got, the pass-through entity tax, right? It's something special we have in Illinois. And that's not something you can do after the year end. It's something you gotta do during your actual business year, right? And that's something that's also gonna help you lower your tax bill. That's why it's so important to be working with your accountant in real time. And he's also gonna make sure, hey, are you taking advantage of certain tax deductions allowed to you? So for example, right, we got something with depreciation, cost segs, right? This is all something that your accountant's going to help you with, as well as maybe your retirement plan, some of these tax deferral options, right? These things are something that your accountant and speaking with an advisor is going to help you in real time. Also, just going back to the first slide, right? We talked about the downside of being a C Corp, that sometimes you get hit with that double taxation. Hey, maybe you need to reassess. Maybe you were originally set up as a C Corp and you're realizing this doesn't work for me. And that could be another reason why you're paying so much in taxes. So really, as you evolve, as your business evolves, you need to be able to take a bigger picture and say, hey, am I putting myself in the correct position from a tax standpoint in being profitable? How much money am I keeping in my pocket? What is something I can do? So talk to your tax advisor, keep them posted in real time, see what you've got going on in the pipeline, review your quarterly estimates, and think about, hey, is there something that I'm leaving out on the table here that I should be putting my money towards? Like I said, there's always tax deferral things with your retirement plans, that you really need to be able to be aware of.
All right, I think that you've hit on some really good points. I think maybe some business owners who are having these issues can, like you mentioned before, just reassess where they are right now and see if there's anything that they could make some improvements on. Once again, if they're really not quite sure where to start, it does seem to be very important to speak with, an advisor or an accountant on, on some of these details and find out if there's, room for, some change.
Yeah, and just one thing I'd add on to here is that, where people usually have this, oh, I pay so much in taxes, is because they wait till, when they're filing their tax return. Let's say April 15th is when, they're like, oh, I'm going to contact my accountant. He's going to put together my tax return. And all of a sudden it says, oh my gosh, I have a $20,000 bill. I paid so much in taxes, right? But let's say if back in November or October, right, you were working with your accountant, your accountant says, hey, congratulations, right? Your business is very profitable. You're probably looking somewhere around a $20,000 tax bill, right? So if you knew, let's say, even in advance, 6 months in advance, to say, hey, this is what your tax bill is going to be looking like, but don't worry, you've got 5 months to come up with the money to pay for it. That's a lot more easy to understand and to work with versus waiting till the deadline of saying, okay, where am I all of a sudden get this money to pay my tax liability? That's why, like I've stressed it a million times over and over again, like a broken record. Speak to your accountant in real time during the business year to see where I'm headed, where I'm projecting.
Yeah, it sounds very important to kind of make sure, even when we were mentioning earlier about like how to be financially aware and healthy, this is part of it, right? To be able to plan for it, to have an inkling, to have knowledge of what's coming, instead of, like you mentioned, waiting until it's time to actually think about that. It should be something that can be on your mind a little bit more frequently than just tax season. All right.
Exactly.
So this is how you would get in contact with Ari at Roth Co. His email is right there on the slide. That's also their website. And then once again, just to hammer it in, if I haven't enough, this content is brought to you by the Community Navigator Pilot Program. This program is funded and powered by the SBA in conjunction with US PAC, US Pan Asian American Chamber of Commerce. Ari and I represent spokes underneath this great hub. So what do we do here? We connect small businesses to free resources and assistance. That includes free counseling as well with Ari. If you enjoyed it or found that he had a lot of good tips to share, just know, using his contact information from the previous slide, you can reach out to him and ask him for help for free. At least the counseling help. And then we also will connect you to experts who could help you with financial planning, if that's not Ari, business financing, operations, marketing, legal assistance, and as well as technical assistance. So thank you so much for joining us. If you're interested in just getting connected to learn more about the Community Navigator Pilot Program, my email is on the screen as well. I will jump back to Ari's just so you can contact me or Ari. And I would like to say thank you so much, Ari, for joining us today. I really have learned a lot from you. I cannot call myself an expert yet, but I am no longer just a beginner or unaware.
Thank you very much for having me. I really appreciate it. And please reach out with any questions, and we want to hear your success.
All right. Thank you, everybody, for joining us. Hopefully this isn't the last you'll hear from us. You'll see us for a little bit while longer. Thank you.
Thank you.